Hello, welcome to our session today. Good morning, good afternoon, where you're at in the world. My name is Bill North, and I'm with Serrala. And today what we're going to do is we're going to have a discussion with Jonathon Murphy from Hubbell Incorporated and William Artingstall from Citi. And we're going to talk about how to get control and visibility over your payments. And today's session is really going to be more of a conversation. We're not going to have a lot of slides or content, but it's going to be more of a panel that I'll go ahead and moderate. So I'd like to welcome both John and Will. John, can you introduce yourself, please?
Sure, thanks. And good morning, good afternoon to everybody. My name is Jonathon Murphy. I'm the treasurer for Hubbell Incorporated. I've been here for 12 years, and we've been on a journey over those 12 years, going from a very manual process from a treasury and AP point of view to a highly integrated process that we'll talk a little bit about here today.
Excellent. Thanks, John. Will, would you like to introduce yourself, please?
Great, thanks. Yeah, and hi, and good morning, and hello to everybody. So I'm William Artingstall, been with Citi for about 10 years. I'm an emerging payments and business development director based out on the West Coast. I form part of the global payments and receivables world within the transaction bank at Citi. Similar to John, I think we've been seeing some pretty interesting dynamics sort of emerging through the years, and I'm part of, the strategy that Citi's setting forth to try and deliver its network of the future.
Excellent. Thanks, Will, and thanks to both John and Will for joining us. So what I'd like to do, let's start out talking about centralizing payments. And John, you've recently gone through a payment centralization project. So can you tell us a little bit about the project? What were the drivers, and what you achieved from that?
Sure, thanks. So we historically were dealing with payments that were managed from our AP process, and it was very much a fraction process where you had these groups or towers within our organization. That process was then moved to a sole provider, offshored, who then were managing our AP process. But we had a couple different banks in the U.S., and so this third party was actually managing the process in a couple different ways. So there wasn't just one clean, straightforward process because of the different banks and the different procedures. And so as part of our recent process, or our project, what we did was we streamlined and harmonized. We've moved our AP in the U.S. to one provider, one bank, and we went from an EDI and a host-to-host managed process with our ERP SAP, our reporting system in our banks, and we've actually streamlined that. And we're BIC enabled or Swift enabled. We have Alliance Lite 2. We have been for many years for Treasury, but we actually moved our AP payments to an XML ISO format. And we run that through our Swift channel as well. And in combination with that, we're also looking at acknowledgements coming back and clearing all of our payments so that there's never a question of, hey, did the payment go out? What went wrong? And we're chasing things days after the fact and dealing with problems. So definitely has helped us tremendously with visibility, again, with a known, streamlined, consistent process. And so far, so good. It's been great.
Okay, thanks, John. As a follow-up question, you mentioned Swift as something that you brought aboard. Can you talk a little bit about where you see, the role of a Swift network when you're doing some process transformation around payments?
Yes, of course. So, for us, when we thought about, bank conversions and RFPs, the one, struggle we've had was, even though you're highly integrated, you're always kind of bound by those connections with the banks. You're dealing with, if you try to move, dropping that, connection, trying to establish a new one, you're not very nimble. And so knowing that by having Alliance Lite 2 as a product that we use and having something with a third party that can plug and play with any bank out there, it just made so much sense for us to be able to be bank agnostic, if you will, when you think about the process, so that we could really manage our process in the relationships with our bank and not have to worry about the security issues and holes in firewalls and all that comes into play. I would say it actually helps our IT resources as well quite a bit. We use Swift for treasury, again, immediate payments, things that we want visibility to and control. And we just thought it made a lot of sense to, onboard the AP payments as well through the same channel and keep things consistent. So.
Okay. Thanks, John. So, Will, from a banking perspective, I'm sure you've seen many of your customers go through payment centralization projects. So, how do you kind of rate the importance of that, and what have you seen your customers and corporates benefit from projects like that? Oh,
you're on mute.
Sorry,
Will.
I think you're on mute, Will. Sorry. I think there was some background noise previously. Okay. Well, we're going through some technical difficulties, which, that's the reality of virtual webinars, right? So as well, if you want to just continue figuring out how to unmute, just jump in when you can, and we'll continue. Oh, there you go.
Sorry about that. Yeah, I think it's a great question. I think, Bill, if I look at this, I'd probably answer it in two pieces. The first is, if you looked at this kind of 10 years ago, I would say that the answer to payment centralization would be it depends, and it depended on where the corporate was in its life cycle, and a lot of corporates were kind of really trying to think about efficiency and rationalization. They were trying to see if there were opportunities to get benefits from automation through ERP platforms. And it was probably more about striking a balance between complete payment centralization and creation of payment hubs. So we saw lots of sort of emerging locations like the UK and Ireland, the US, and Hong Kong kind of emerging as places where corporates were looking to set up payment hubs and sort of treasury locations. If I fast forward that to probably the conversations over the last 2 to 3 years, I think the conversations become far more about data. So what we're obviously seeing is a shift where, because the conversation is now a little bit more about data, it's become a little more, it's a bit more sort of imperative to have some form of centralization of actual information so that you can try and manage some of the kind of flow of information that you've got. And the question now is a little bit more about the type of flow that you're actually trying to intermediate. So I think from a B2B standpoint, so if we look at kind of a standard wholesale type flow, centralization still remains extremely relevant. It's a very important process. You're still talking about needing to control the outflow of payment. The size of transactions is much higher, and you want to have sort of potentially some treasury-based control over that process. I think the second type of lens which we're seeing emerge, again, sort of very data-driven, is D2C. And when you're looking at the direct-to-consumer lens, what becomes more important is actually around what control and rulemaking you can actually manage within the system itself. So, you're starting to look at automation, but it's far more rule-oriented than it is process-oriented when you're looking at like the wholesale flow.
Yeah. Okay. Yeah. I think that's consistent with with definitely what we've seen across technology projects. Will, I'm going to stay with you for the next question, and I would say, what are examples of best practice that you've seen around technology projects in the payments area?
Yeah, so I think there's a couple. I think, obviously we've touched on this slightly during sort of the centralization piece, but, technology tends to form probably the most important backbone of your sort of payments infrastructure. So having an ERP or a TMS as kind of a good foundation is really speaking the starting point. That's kind of gold copy 101. But I think what we're starting to see, and again, this is probably leaning a little on that sort of data trend that's been coming up over the last 2 to 3 years, is far more utilization of things like robotic process automation and a little bit of use of AI. I think that's becoming something that's a bit of a new trend. The one sort of, get on my soapbox statement I'll make there is it's, robotic process automation is definitely not a fix-all for bad process. So effectively starting out with a good process should be 101 before you're getting into kind of a technology conversation. And the two use cases, I think, within RPA and AI that are emerging as really interesting ones is firstly around reconciliation. So we're starting to see clients utilizing, some form of AI to do things like automate reconciliation, where we've got more information. You can try and lower some of your incomplete rates around unreconciled items. And then the second is around documentation handling. So in a lot of countries where you potentially have challenges around trying to get, money out of the country, or you've got sort of capital controls, you can look at using technology as a way of improving that kind of, or streamlining kind of that cross-border payment process. So we think there's kind of quite a lot of opportunity coming up there. The other areas I'd point out, and sticking with kind of cross-border flow, is Swift GPI. I think has been a real breakthrough case. I think as an opportunity for clients. One of the things that's great about that is that you've really got that ability to almost like track the package, if you will. It's like looking at a payment like a delivery message. Being able to have that kind of transparency through a cross-border transaction, I think, is amazing. It's driving a lot of efficiency for corporate clients. It's driving a lot of transparency. It's no longer that black box where you just kind of hit a transaction out and then just hope that it hits, your beneficiary in 2 days' time. So I think that's quite a big one. And then the last one I'd bring up, which I think is going to be a really interesting enabler going forward, is we're starting to see payments users utilizing some of the technology that's coming out of the card world. So things like outlier detection are becoming quite an interesting use case. And classic examples there are, if you're constantly making a payment to a vendor and you keep making that payment in the same amount every single month, and all of a sudden it goes to a brand new bank account or a new location, things like outlier detection can be pretty useful to try and help limit some of the fraud potential that you could have within the ecosystem as well.
Okay, thanks, Will. John, do you have any thoughts on any of the technology that Will talked about, and maybe considering that for Hubbell long-term or evaluation?
Yeah, I would say his comments around the data and reconciliation is spot on. I would say, again, when you think about, the outbound portion, it's not just that. When you think about just holistically what Treasury gets involved in, whether it's AR or just the general ledger accounting for sort of the cash transactions, we've integrated as well that piece, which takes a lot of the day-to-day work off, I would say, the accounts, and making sure you have a clean GL when you think about what's going to get done on a monthly basis. You're dealing with exceptions that aren't matching rules versus spending your time going through each individual transaction. So it truly is dealing with just the outliers that aren't matching for one reason or another, and you'll learn to get smarter on what those are, especially if they're consistently showing up as outliers. So couldn't agree more. Again, it's getting rid of the day-to-day process that just has to get done, but trying to automate that. So you're spending your time creating more value for the organization in other areas that are more meaningful, arguably.
Bill, just to add, sorry, on to what John's saying there. Actually, one of the things I think we really see as a great opportunity with tech is to help drive Treasury as a growth engine for its business. And I think that that's going to be a really key sort of differentiator for sort of the real successful treasuries and corporates going forward as well. I think it's a great statement there that John had made.
You couldn't agree more, and you can't do that, especially in this day and age. You tell me what Treasury Department is being able to get more bodies year after year. So that's not reasonable or likely, which means you got to do more with the same or more with less. And so these automation to these processes, you need to kind of get those sorted out so that you can drive that value. Agreed.
Yep. Good. John, the next question is for you. So you've gone through this, payment centralization process and project. How far are you going to take it? So, some examples of further phases could be things like in-house bank, payment factory, pay on behalf of, and that is obviously dependent on the business and how it's structured. But what are some of the next goals?
It's a loaded question for sure. I would say where we are now, I would say I'm comfortable with the here, now, and today. And what that is really going from a legacy process where you had various business units paying their bills and then recording things in their ledger to no, it's now integrated with our ERP, but still various groups doing so. Then, it morphed to force specific main groups within our business kind of centralize in their own business function to truly outsource to one third-party provider taking care of all of that. And so from a mechanics point of view, that part's solved, I would say. Again, from a streamlined process, we've done that with this recent project as well as running it through Swift. So again, getting to what I would call sort of a nirvana state. But there is a thought around in the U.S. when you think about, multiple entities and multiple accounts, is there a cleaner, better way to do it? Dealing with the in-house bank or paying on behalf of. So I would say that's something that's a future state, but I would say there's a lot of work to think about when you're dealing with the setup in an ERP and that relationship and making sure from a tax perspective, all that's been reviewed as well too. So that I would say would be sort of the ultimate goal. But I think even though we're highly integrated, we're still a ways away from that, and it's definitely a different way of thinking about how we've done things historically. So it'll be some effort for sure to get there.
Yeah, okay. And Will, have you seen in the market any trends going toward any of these larger? I would call it maybe more ambition, more work, but potentially more return, right? Any of these larger projects?
Yeah, I mean, I think Hobo and payments on behalf of an in-house bank concepts have been there a long time, and I think they've kind of been deployed to various sort of levels of success, and I think they've really depended. What I would say is we've probably seen them being more successful in regions than they are in other locations, and primarily to John's point, I think what happens is the moment you peel the onion, the moment you kind of get down to a stack of actual kind of country considerations, tax considerations, and what the regulatory allowances actually let you do, that's really where the rubber hits the road, and it becomes a lot more complex and maybe not allowable in every single location. So I think it's probably more of a regional play in some scenarios. What I would say is on the collection on behalf of side, we're seeing kind of a bit more of an emerging trend there where maybe one of the things that's shifted a little bit is actually, rather than thinking about ease of collection for corporate itself, they're actually starting to think a little bit about ease of collection for their client. So maybe they can offer a currency that makes more sense for the client rather than saying I need to collect in a G3 or the likes. I think that's been a trend that's a little bit interesting. But again, you run into similar kind of challenges when you get down to a lot of these markets. There are still a host of countries out there where the regulation needs to progress to a point that they're actually supporting on behalf of structures. I think it's probably clustered a little bit more around certain regions at the moment, and tying that together with some form of collection efficiency, by offering some form of account structure or a currency structure that helps you collect from those customers.
Okay, thanks, Will. We'll stay with you for this next question, and that is what we're seeing in the payment centralization world now are these APIs, right? Everyone's talking about APIs, and some regions of the world are probably a little bit ahead of the U.S. regarding the use of APIs, which is probably consistent with payment technology in general. That's just my personal comment. But so, what are you seeing in the adoption rate of APIs? What are the business drivers, the value add for APIs from a corporate perspective?
Yeah, sure. So APIs, look, I love that you've asked this question because it allows me to say my favorite cliche of all times, which is when you're holding a hammer, everything looks like a nail. And I think APIs are suffering with that a little bit at the moment. I think when I say suffering, it's driven a lot of adoption. Everybody has thought automatically that because APIs are kind of a very instant way or easy one-to-one way of collecting information from another provider. We started seeing use cases like using an API call to get something like a bank balance statement. So you wanted to get an idea on where your position was for the day. So you did like a balance inquiry through an API. Those type of use cases were really rudimentary. I'm not sure they drove significant amounts of value for Treasury, especially some of the more traditional treasuries. Typically an end of day statement was the maximum amount of information you could deal with anyway. So those use cases were probably early on that might not have been perfectly fit for purpose. I think if you look at what sort of now is progressing is there's a big debate around whether an API is the correct method to use or a file is the correct method to use. I think what we're suggesting to a lot of corporates at this stage is, as you're looking at APIs, consider what your underlying philosophy or your current psychology is within Treasury. And primarily what I mean there is it's almost impossible to use something that's going to be a one-to-one relationship that might be dropped. You're going to have to send 50 of them to get the same information you could with a single file. If your logic inside Treasury is batch, file might still be the right way to keep the interaction between yourself and some third-party provider. That's kind of one of the debates we have. Where we're definitely seeing significant use case and really, really big growth in terms of API has been predominantly around some of this kind of direct-to-consumer interaction. So we're seeing APIs being tied directly to how a product actually works. And that's been really exciting to see clients and corporates actually building products around how an API itself functions, using it to do things like push a transaction and then track its execution through the payment lifecycle has been really exciting to see in the API world. But again, it's not a one-size-fits-all type of solution. It's still got a couple of kinks in the armor that it needs to work out. For example, things like standardization still has quite a long way to come. A lot of APIs are really proprietary to each entity that you're engaging with.
John, do you have any thoughts on that? I think you in kind of the Swift way, but any thoughts?
Yeah. So sort of what was just being said there too is understand the value you're getting. If end of day statement, as an example, is good enough for what you need, there's no need to set up some sort of call out 10, 12 times a day, spending the money, because what's the value that you're actually getting? So just be mindful of when you're building something, what do you need and why? And also be a bit forward looking. So it's not just what do I need and why today over the next 5 years, next 7 years. If it makes sense, move forward. If not, pause and think about what might be changing over that time frame and if there potentially could be better solutions.
Okay, thanks, John. And I'll stay with you for the next question. And that is, as you embark on projects around payment centralization and that in general, what do you like to see from your banking partners and from your technology partners? And how can they best assist you as a corporate treasurer?
I would say first and foremost is understanding what we do and why. I would say kind of understanding and deconstructing our process to make sure that we are being as efficient as possible. As a treasurer, you don't know what you don't know sometimes with all the different hats you have to wear. And so understanding what's possible out there and why is very helpful, but also understanding sort of that path to get there and how much of a lift it may be and whether or not it's worth the calories to get to what I'll call your nirvana state today, or if it's better suited for a couple of years when things are better aligned. But again, bringing all ideas to the table and having an honest conversation around what makes sense and what doesn't, and not just sort of the hot topic of the day, and just being a value partner in the project for sure. That's to me, I can't stress that enough. You're trying to get to a better state and provide a benefit for your organization, and in doing so, you're relying on people who do this day in and day out that you may not be doing. And so understanding all those options and having them on the table, definitely, you can make a better decision when you know all the potential options you have versus just being given a limited set of details, I would say.
And Will, any thoughts on from your perspective, what you've seen, just how corporates approach these type of projects? Again, maybe John's giving us advice, right, which is really valuable, and now you can give kind of corporates advice on how you've seen successful projects go about.
It's a great point. I mean, I think it's an interesting one. I think the first thing is we've been big sort of proponents of trying to ensure the Treasury continues to position itself as an engine for growth inside its own organization. I think we've started seeing a trend emerge, and it's not consistent across every single corporate client. I think it depends on the industry that you're in as well. But we've started to see kind of new buying centers emerge within Treasuries. And what I mean by new buying centers is, you're seeing kind of groups like like sort of having payment heads within companies. You're seeing online e-commerce heads within companies. You're seeing kind of like consumer interaction engineers within companies. So I would say there's a lot of new buying centers emerging that are kind of interesting. And we've been, spending a lot of time working with treasuries to try and help bridge the divide, I think, between the way in which those two buying centers actually think about engagement. Because I think let's say the payment lenses or some of these new kind of buying centers within corporates they're definitely focused more around how they're delivering their own products or services. And I think what's happening is what we would like to continue to see is Treasury being a great enabler of those things and really helping to ensure that they're setting the tools up today that make that happen. But that also means, the Treasury's got to keep its finger on the pulse in terms of what's going on, in terms of the trends that are out there today, what's kind of new and emerging. If there's new payment types coming up, making sure that they're potentially making those rails available to their business so that if a potential person inside the organization comes and says, I'm really interested in trying to leverage, this new rail, Treasury is able to quite quickly say, look, that's plug and play. We know about this. We've got a bank provider that can support it. All that type of thing becomes a much easier conversation.
Yeah, perfect. Thanks, Will. I'll take a quick pause. I'll let the folks that are the attendees. You can submit questions via the Q&A box. We do have a couple of minutes left. If you'd like to submit some questions, and if we have time, we can go ahead and tackle those. So as we wait for those, I'll throw out one more question. And we've got about 3 or 4 minutes left on the clock. We want to keep and respect everyone's time. So I would say that the last question that I would throw out there would be just generally, John, in addition to the advice that you've given on this session, which has been really valuable, by the way. Is there any other piece of advice to a fellow corporate treasury professional as they start to embark on a journey like this?
Yeah, I would say that there's a few key things that have mattered to me over this journey that I take note of. Number one is have a very strong relationship with your internal IT department. Their resources and their time is limited and valuable. And that's allowed me to kind of put some projects, ahead of others. So I can't stress that enough. Make sure that relationship is strong. I would say that also, knowledge transfer is very important. When you go through a process, make sure it's just not, risk to one person knowing what goes on from beginning to end. Make sure that that's understood across the group. Otherwise, you're dealing with folks that know just their little snippet of a piece of a process. And when something goes wrong, you're trying to figure out who knows what and how do you correct things. So that knowledge transfer is very important. And lastly, I would say sooner than later, as you grow as a company, as you move along through time, it just gets harder and harder. The bigger you get, the more complicated things become. And it's easier when you can draw the line in the sand and come up with a standardized process, get that engaged, and then it's rinse and repeat, if you will, as you go through and grow as an organization. So I can't stress those 3 points enough.
Okay, thanks, John. That was really valuable, right? And I think just one quick comment from my end is one of the things that we've seen treasury professionals do is kind of get in the pattern of chasing the next big thing, right? And I think that's kind of what you just said is chasing the new technology, or, hey, I just went to a conference and I just heard about something that sounds really, really cool, and I want to go chase it, right? But I think the successful projects, as you've shown at Hubbell, is when you can draw a line in the sand and say, this is our goal, right? And that might be future nirvana state, but this is what we're going to really work on and we're going to focus. And it's an easy trap to fall into, right?
Agreed.
And Will, hold on, let me check one quickly on the Q&A box just to see if we have any questions. And we don't right now. We still have 1 minute if you want to submit a quick question. But in the meantime, I'll go back to Will. And I think the last question I'd like to ask you, Will, is just generally, right, speaking to global payment professionals, are there any other trends or, either emerging tech or even just, structural trends, organizational trends that you're seeing that you would like to leave with the audience?
Yeah, absolutely. I think there's been some really interesting payment reports coming out, this year, and I'd highly recommend that you get out there and have a look at what some of the big auditing houses and sort of consulting houses are putting out there at the moment. There's some great content. Two of the things I'd leave you with, the one is, we're really seeing kind of only the projections from a lot of these consulting houses that there are only really two transaction types that are going to grow into the future. The one is kind of bank transfers, and the second is alternative payment methods. So this is like the utilization of solutions like wallets and mobile, and that's obviously really key in the peer-to-peer space. But I would say that those two are really interesting spaces to keep a finger on the pulse. And what I'd also say is we've seen, under COVID environment, there's been a really significant growth in instant payments. And if you have a look at a couple of the reports out there, you're seeing some countries seeing value growth over 200%, volume growth over 200%. So really, really significant uplifts in the instant space. So key one to watch. And then the other one I would just say is just thinking back to this alternative payment methods that are emerging. One of the things we're seeing as an early kind of indicator here is a lot of treasuries are not quite ready yet to deal with some of those additional proxies that introduces into the environment. So historically, they would have always looked at something like a bank account or an IBAN to actually execute a payment. Now you're going to have to deal with things like mobile numbers and potentially email addresses and the likes. And thinking about how you actually go through managing a proxy for that, if you wanted to take advantage of a wave like that, is going to be a really key consideration into the future.
Thanks, Will. I think I'm going to go ahead and extend it maybe by 1 minute, if you don't mind, because we did get a question in that I think the audience would be interested in. So there's a question to John, and the question is, what Serrala products and services have you used or are you actively using?
Okay. Thanks for the question. Appreciate it. So we use Serrala has some add-ins for our treasury process that we use now. So there's the standard, we're on HANA now, S4 HANA for SAP. And there's some add-ins that Serrala has for cash concentration, for treasury process, as well as some of their batch processing for our AP payments that go out the door and acknowledgements. And so we're seeing the acknowledgements come back when the file is actually transmitted from our company to Swift to say Swift's received the file. And then from Swift to the bank for that acknowledgement to come back to say payment's been received and accepted or not, and here are the issues. So things like that will tell you right away if it's dead on arrival to either to Swift or to our bank, depending on which leg of the transaction you're looking for. That kind of gives you a heads up on if we need to think about addressing those payments. So we also use bank account management as well. Keep track of who the signers are, things like that. Helps out with FBAR. So those are the products we're using currently.
Okay. Thanks, John. So I think that's all the time that we have for today. I would like to say thank you to both John and Will for joining today. It's been a great session, so thank you for that. I'd also like to thank all the attendees for joining today. And I'd like to just leave you with this, that at the top of the next hour, so in about 27 minutes, we have our next session for the day, which is really how to set the game plan. So now you've heard about some really good ideas and thoughts about payment centralization in these two sessions. So the next session will really focus on, so where do we start? How to set the game plan? And it'll be my colleagues, Nancy and Bart, managing that. So hope you can join. And again, thanks everyone for joining.
Thank you.
Thanks.